The Fed, for instance, in charge of the Treasury market, basically has to stay where it is, or maybe even lower interest rates, or have a renewed quantitative easing program at some point.
Don't say the bond king of Janus Capital didn't warn you. Yeah, that was Monday right here on Countdown, where Bill Gross warned that that might happen. Sure enough, today, at one point during her testimony to Congress, Fed Chair Janet Yellen suggested exactly that. Let's bring in the floor show. Because joining us now is somebody who warned back in August that it would be terrible timing to tighten, although he had advocated tightening years ago. Peter Schiff, along with our traders at the New York Stock Exchange, CME Group, and the NYMEX. Doreen, to you first. The markets do look confused today by what Yellen is now saying, namely that a rate cut isn't necessary, but that, quote, we're not on a preset course to do anything anticipated. So how are we to interpret that?
Well, I'm a little surprised that anybody was surprised at all at what she said. I think it was pretty much what most traders down here at least expected to hear from her. I think that it's been very clear for a very long time that this is going to be a very gradual process. We now know it's going to be much more gradual than we had originally thought. But I don't think that that was a very big surprise. I think more or less traders are looking forward. As soon as she stopped talking, we're looking at Cisco earnings tonight as a bellwether for what kind of guidance we're going to get after the debacle in the tech sector in the last few days. We want to kind of see what the guidance coming out of that company is going to be. Initial jobless claims and retail sales for the rest of the week, which I think are going to overshadow much of what she said today.
Mark Sebastian, we may not be surprised, at least some of us, by what the Fed said, but the markets right now have shown complete confusion today. If we showed an intraday of any of the major indexes, mostly the Dow, because the NASDAQs look pretty healthy, but the Dow has been up, down, all around. We called it Land of Confusion with a nod to Phil Collins and Genesis. But what does this tell you?
Well, I mean, when you get a confused market, it tells you you've got a confused Fed. Now, it's nice to see one of the pieces that I saw from her statement this morning that I thought was actually valuable was her acknowledging that external forces are really affecting the U.S. interest rate market. Going into December, they were basically ignoring Europeans killing their bonds and currency, Japan doing the same, and China killing their currency. It was nice of them to tacitly acknowledge that, you know, the U.S. is no longer in a bubble, and maybe the reason why they can't raise rates is because of external forces. Additionally, the one thing that I thought was really odd, this was weird. It was, okay, we're not going to raise rates because the market is selling off, but when the market calms down, we might start raising rates again. Except the market is selling off because you might raise rates again. So it enters this crazy circular logic. And so if you want to know why there's confusion, it's because the Fed is creating it.
And here we are, Luke, barely above $27 per barrel. And to me, we got a drawdown today when it came to inventories for oil. Big deal. What, 800,000 barrels of a drawdown when we have millions and millions of barrels too much, correct?
Yeah, I mean, the number wasn't a big deal. And I think today is a good day to look at oil in correlation with other asset classes. And a rough estimate is if the dollar moves up 1%, then oil should move down 0.75%. So what I want to do is look at oil right now and see how it's going to react to the dollar. If a dollar has a couple of good days, if oil doesn't collapse, maybe it's starting to form a bottom. Yeah, maybe it's starting to get stronger. If not, and if oil doesn't break 30, I'm not going to be very optimistic.
The U.S. dollar's barely off the 4-month lows that it hit yesterday. To Peter Schiff, who warned back in August, and we showed what you had said then, that the window was missed years ago. What is your prediction now? You use the term collapse, crash, could be a little bit of hyperbole, but I still don't see exactly that, Peter. What do you see in your crystal ball?
Well, first of all, I don't think there ever was a window. Right? Whenever the Fed raised rates, it was going to be a disaster. The fact that they waited so long means it's going to be a bigger disaster. But you know, we're only going to have a crash if Janet Yellen continues to pretend that the economy is healthy and that the Fed is planning more rate hikes. I think the Fed is going to launch QE4. I think the next move by the Fed is to cut rates, not to raise them again. So it's not going to be a slow process. The process is over. But as long as the Fed is going to keep on bluffing, the markets are going to keep on falling. There is nothing beneath this market but hot air. We are in a bear market. It's going to continue until the Fed capitulates and tells the truth. But the problem for the Fed is they're now in this credibility box, which I thought they were smart enough to avoid when I thought they wouldn't raise rates at all. But apparently I overestimated their intelligence. They were actually dumb enough to raise rates a little bit and think that it wouldn't matter. Well, it matters a lot. And, you know, Janet Yellen testified today. She needed to give Wall Street something. She needed to say no rate hikes are coming in the foreseeable future. Absent that, trying to be half dove and half hawk, it didn't work, and that's why this market is going a lot lower.
So it's like a duck-billed platypus that looks like a beaver and a duck and all of that. Peter, stay in the chair. We're going to let our traders go because we're suddenly at session lows for the Dow. Peter's coming back in just a minute with more on his predictions 35 minutes before the closing bell rings. Don't go away. Well, the S&P just fumbled about 24 points of its gains, very close to the flat line. Guess what is starting to work, although suddenly it's turned around, Peter, and that's gold. Peter Schiff of Euro Pacific back with us, although it's getting closer to 1,200. What's going on?
Well, gold's really in a perfect position right here. It's already rallied $150 approximately since the day after the Fed hiked rates. But right now you've got two possibilities. One, if the Fed continues to pretend that it's getting ready to raise rates again, or actually raises rates, then the stock market's going to keep falling, and gold's going to benefit from the flight to safety bid that's been driving it recently. On the other hand, if the Fed tries to save the stock market and calls off the rate hikes or cuts rates back to zero, which I think they're going to do, now gold really takes off,
well,
because the whole story driving gold lower.
We're showing the Spider Gold Trust in just a week. It's gone from about 109 to 114. Are you saying that that trajectory continues? Because, listen, there have been bad pieces of news over the past couple of months, and yet gold still seemed to be languishing a bit until recently.
Well, I think it's going to continue. And as I said, if the Fed has to admit that rate hikes aren't coming, then gold's going to take off, because the entire case for selling gold for the past few years has been predicated on the Fed normalizing interest rates. If they admit they can't do that, if we're back at zero again, if people realize that we're trapped in this monetary roach motel forever, it's QE infinity, then there's nothing to ever restrain the price of gold, and it's going to take off. Meanwhile, you've got a lot of people short gold, and I think they're going to get crushed when this market reverses, and it becomes very, very difficult to cover those shorts because there's not a lot of physical gold around.
And for those who missed what Yellen said today, I was taking notes, and here's what jumped out at me. Growth since the crisis is disappointing. Okay, we knew that. And we should look at negative rates. This seemed bizarre to me. In the spirit of prudent planning. Translate that for our viewers.
Well, first of all, there's nothing prudent about negative. But the fact that they're considering it means it's going to happen. I mean, what the Fed should do is rule it out outright, because it doesn't work. It's not working in Japan. It's not working in Europe. In fact, it's backfiring. Look what's happening to the European banks. They're getting crushed because of negative rates. So the Fed should rule it out. But look, they are desperate. They're trying everything they can to delay the day of reckoning. But the problem is, because they delayed it so long, we have a lot more to reckon with.
Who's your candidate, Peter? I know you were supporting Rand Paul. He's not in it anymore. Tell us who your candidate will be now for president.
Yeah, you know, he was my only candidate, so I don't know if I have a candidate. You know, Gary Johnson is going to be running as a libertarian, so he might be my guy. I don't know if there's anybody else I could philosophically get behind, but we'll see. I'm still reserving judgment.
I'm only laughing because I love that you are consistent. There's Peter for you, totally consistent. Peter, thank you. Thank you so much for joining us. Peter Schiff, Euro Pacific Capital President. Another